a couple of disclaimers real quick. First and foremost, this is educational entertainment only. Information provided tonight is strictly my opinion, and those that are in the voice channel that are speaking, it is their opinion as well too. None of the things that we are talking about tonight, none of it should be construed or taken as financial advice. This again is educational entertainment only.
All right, Arjuna X. Bob, is there any update on the upcoming Angis vaccine data for BBI, timing or otherwise? What does it seem so under the radar? Well, first and foremost, let's look at BBI. When did I call BBI, Hugh? Was that like November, December last year?
Yeah, I can actually look real quick.
So I called BBI as a run-up. I want to say...
No, before that.
No, it was before. It was like November-ish. So I think I called BBI as a run-up, let's say like late October, early November, probably mid-November, when it was around 53 cents. BBI went all the way up to, on February 10th, $1.70. So, two questions for Arjuna. When did you get in? And if you got in around that time frame, did you take any off in the February time frame? So that's my first question. Second question is, yeah, dude, we're waiting on Angis data. The question is, where is it? And, that's always the challenge. BBI turned it over to Angis to do that portion of it. My recommendation, I will tell you, I'm out of BBI. It ran its course for me. At this juncture, I would play it as a day trade on the trial. You can check the Angis website. You can email BBIIR. It's probably not a bad idea to look at a quarterly filing or updated presentation. I'll put it on my radar too. I'll shoot them an email, see if they respond. It's still very interesting to me, I think, as an opportunity, as a vaccine candidate. The problem now with COVID and the vaccine candidates, we got a lot of vaccines on the market. We got J&J, we got Pfizer, we got Moderna, we have AstraZeneca. You kind of look back at the time frame of vaccines and the whole COVID place from last year. It was around this time frame. So we're 1 year out from all the madness beginning. And it looks like we've kind of rotated away a lot from the COVID place. And now we've migrated towards our new flavor of the first part of the year, which is NFTs and crypto and blockchain. And so what you're seeing is the traditional theme rotation. Does it mean that COVID won't reappear and the vaccines won't reappear? They could. If the variant proves that the current vaccines don't work against these new double-headed variants that I'm reading out of India and this and that, then we have an opportunity to relook at some of the vaccine plays. But for me, they're way back on the back burner. If there's something around long COVID and a drug works on whatever long COVID might be or what it really truly is, then that'll pique my interest as a potential move forward. But as a general vaccine play, I kind of think we've run our course on these a little bit. All right, Fibs. This is the question below from Beachful. Fibs, which is correct or most accurate when drawing fibs? So here's the deal. I don't use fibs. I know Brady uses them. I know a couple other guys use them. So for me, I do not use Fibonacci retracement. I've talked about this before, and I'll bring it up again. The main lines that I use I use 3 charts. I use a 1 and a 5 minute chart, and I use a daily chart. The lines I look at on those charts for support levels are the 13 and 9 EMA, 13 and 9 EMA, VWAP. And then on the daily chart, I will throw in the 20, 50, and 200 MAs, moving averages, simple moving averages. That's it. I used to have Bollinger bands on there. I still do. I really don't pay attention. So the reason that I have those 5 lines on there, those are traditional human and algorithm supply and support, resistance and support lines. And so I really rely on those more than anything else. And yes, do Fibonacci retracements work? Yes, 100,000,000% they do. It's just not something that I utilize in my arsenal. But there are other folks that are much better with those than I am.
Mm-hmm.
All right. What precious metals do you think are the best hedge against inflation? I've talked about this ad nauseum, guys. I'm a big silver guy. I think first and foremost, gold is overpriced. It doesn't have real utility outside of being gold and a backing of currency. And this is just my opinion. Silver has utility outside of being a currency. As you know, and I think most of you have seen, I buy physical silver. Sometimes I show a picture of it. When I talk to the guys that I buy silver from in my area, they cannot get physical silver. They are 5 to 6 weeks behind any inventory coming into them, which kind of is great and then is scary and really sucks because, dude, I'm dropping now $3,000 plus on a single bar, which is, yeah, dude, it's cool. I got a whole bunch in my safe, but at the same token, it's like, shit, I got a lot of silver. But there's utility to it. And so I think we've seen some commentary on it. I posted it. JP Morgan has been notorious for manipulating the silver market for years and shorting it with SLV. That's the ETF, the paper index. But what we're seeing is a decoupling from PSLV and SLV. And so at some point, everyone's like, well, what do you do with silver? What do you do with GPL? Dude, I just sit on them. They're strictly a hedge because if and when, and probably it's more of a when, inflation hits, hey, dude, those will turn around real quick. And then I can, dump GPL at some point. And then, do I want to get rid of my silver bars? I don't know. We'll see. We'll see what the inventory is. But it's not like you can just magically have silver appear out of the ground. A lot of these miners have been shut down, and it takes them up to 9 months to get back to production, to get back up full online. And then you add in the COVID mix. And a lot of these miners are like in Africa or South America. Well, look at the COVID numbers down there. So yeah, it could be a long time before real silver production comes back online. And that's why we have issues with semiconductors and other things. And the federal government's looking at ways to ramp up supply. And can we tear down some taxation and importation with Canada and make some sort of deal so we can access their mines? There's a real underlying current that doesn't smell right to me. And so this is why I'm hedged. And yeah, you sometimes you're down on this stuff, but that's sometimes what a hedge is. It's a safety net.
Yeah. Wait, Bob, while we're at it, one of the questions that we get a lot is about hedging. Hedging is not just intraday. When I
Nope.
at least, yeah, Bob, stop me if I'm wrong, but when we talk about hedging, we're talking about the overall market as
Yep.
like, not like 383. We're talking about like 323 on SPY.
Yep.
I think that's a really important point.
So let's talk about that real quick too, because and again, these are my vantage point in my opinion. So a lot of us will day trade and we'll clear our book and go home cash at night. You have no reason to hedge. I will tell you that I own stock in blue chips. I have a lot of mutual funds. I have other things I'm invested in. So I need to be hedged in case things go south, that the other things that I have will go back up to counterbalance. And so it's strictly a hedge for that reason. But if you're day trading and you're, like I said, you're cash, 100% cash at the end of the day, you have no reason to hedge. There's none. I personally have a reason to hedge.
Yeah, that's awesome. And I think that's a really good point. And I mean, I certainly do not have Bob as big of a reason as Bob does to hedge. What we used to call you 9-figure Bob.
I don't know. Dan called me something. 8-figure Bob? No.
Yeah, 8-figure or 9-figure. It might even been 10-figure Bob. But I think that's a really good point, guys. That if you're hedging,
might be a few decimals in there to be 10, but
but if you're hedging, don't just hedge with like SPY weeklies. It's important that if you're a huge swing trader and if you have mutual funds and all that, 10-cent SPY weeklies aren't really like a real hedge.
No, those are more bets. Like listen, guys, commodities are a hedge. Go to the grocery store. Like I went the other day and I hadn't been in a few weeks, and I go there and I'm like, when the fuck did milk get so expensive? When the fuck did a carton of eggs? Like, and look, it's not like it's up $4 or $5, but dude, I mean, you're talking, 20, 30 cents premium from where it was 2 weeks ago. That, for the average person, that's that shit adds up. If you have a family of 4 or 5, dude, that shit adds up. And where is that? That's inflation, guys. That's inflation. I don't care what the government says. That's inflation. As much as they want to deny it and pacify it, that is inflation. And listen, we keep printing money stupidly like we are. It's going to keep getting worse and worse and worse. I'm old enough to have gone through it. It sucks, dude. But these are the cycles. And, regrettably, COVID threw a monkey wrench in the economy when it was really moving. And, we've got still a long road ahead. A lot of you guys are probably young enough where you went through the Great Recession, but didn't trade it and see really what it impacted probably your parents. Dude, it fucked people up. And we're kind of getting a little itch, man. Kind of not feeling comfortable, moving forward. We'll have to see how things play out over the next few months. Let's just hope we all recover quickly and things snap back pretty good. So. Yeah,
it'll be interesting. I think it's April 15th or April 16th. Adelon said is the inflation update. So that'll be that'll be a week that I might hedge with the SPY weekly puts.
Yeah, I mean it doesn't hurt. I mean, worst case you eat the puts, but then you're hedged in the instead of making no money that week, you're still making money.
Yeah,
so, definitely. You have to see. All right, let's dive on in. Any tips on reading level 2? Yeah, number 1 tip: if you have no experience reading level 2, do not read level 2. That takes time, guys. It takes a lot of time. You need to have a chart against level 2. So you need to have a chart next to the level 2 is my recommendation. So side by side. And if you don't have experience reading it, then paper trade it and understand that what you see there is not the entire order book, because the market makers will see more level of depth than any of us have managed to, unless you're a market maker. And there's a ton of dark pool buried in there. I can look at level 2 and trade off of it. As long as I've glanced at a chart, and kind of memorize where those support and resistance lines are, as I stated before. But level 2, once you start reading level 2 with your right eye or left eye and looking at with the other eye the chart and really see them side by side and see the money flow and see the shenanigans that get played, you've really graduated to another level on the karate belt. It's pretty eye-opening when you see it, but again, it takes an enormous amount of time to do that. Just be patient. Bob, Hugh, Dan, doing good. Thanks for providing excellent service to the Atlas community. My question is regarding current market situation. How long the current situation will last? Dude, that's our question. I think a lot of us were spoiled, including myself, under the Trump administration. Whether you're a Trump fan or not is irrelevant. We were in a robust, booming economy, and everything was on the up. We are under a new administration. There is an enormous amount of uncertainty because of the new administration. It does not mean that they are doing things wrong, and it does not mean they are doing things right. The market is trying to figure out what the next move of this administration is. The beauty of the Trump administration was it was pretty damn easy to read what Trump was going to do. I understand that the things he said were a wild card. You never knew what the hell he was going to chirp out of his mouth or tweet. But from an economic standpoint, it was pretty damn predictable. So this is the kind of like, I'm feeling you out, you're feeling me out kind of phase. And we're trying to see how we want to take this dance. Things will start moving back in the right direction. We just have to kind of give it a little time. And so my only advice during this time is, if you were buying on average, I don't know, instead of doing dollars, let's say you were buying 5,000 shares every single trade, it may want to cut it back to 2,500 shares. Guys, money is always going to be made in the market, but until you feel comfortable in the direction of the stock you're in, of the overall market conditions, take a step back. It's okay. You don't want to get caught with your pants down and go, oh shit, now I'm in a real pickle because I just blew up 50% of my account because I didn't time things right. Things will get back to a normal order flow, but they have to feel each other out first. Has the market been this crazy before? Huge drops? Yeah, dude. I mean, yeah. This is this market, what we're living in today, to me is completely normal. What we lived with basically from shit. I won't even say it was March, like April, right, Hugh? Maybe it was March. Right after that COVID V, the V rebound. So let's say March. Dude, that was the most abnormal market. Watching every penny stock go from 7 cents to $1.50. Dude, everyone on the call, utterly abnormal. Like, I've never seen that in 15 plus years. I can tell you every trader I know has never seen that in 15 plus years. People will clamor and pound their chest and state that, look, I called this and I'm the greatest trader since sliced bread because this went from 15 cents to $1.50. I know what the fuck I'm talking about. No, you don't. You're a hack. That's a hack comment. No, it's never done that before, guys. If you looked at FinViz, we were down to like what, 7 stocks under $1. It doesn't happen like that. And so we were in a unique situation back then. And I'm glad we all got to benefit from it. We will just be more strategic moving forward. And if that opportunity presents itself again, then we'll take full advantage of it. I mean, I never thought I'd see, from a trading aspect, in under 10 to 15 years, like the Great Recession rebound. Dude, I got to do it twice during that time and during the COVID bounce. I mean, this is crazy to me. I never thought I would see that again. And so guess what? Maybe we get to, maybe we have the opportunity, not that I want to see a crash, but maybe we get the opportunity to see another kind of cycle like this. But what I'm seeing now is more traditional, where you have some algo runs and then you have some periods of just kind of like chop fest. Welcome to trading. It's not shooting fish in a barrel. It's not, shooting before aiming. You got to be much more strategic on your thought process. Holding swings through market weakness versus holding cash. So this is from Toffee. And I'm trying to catch up, guys. I know I'm like super behind on some of these questions because I can be a little bit wordy. So if I have a swing position, I have a conviction to that swing. And yes, do I feel some pain in some of my swings because they're down? Yeah, dude, I don't like seeing red as much as the next person in your book. But that being said, I also know the current market conditions that we're in. So I will not size my swings as I traditionally do in these markets. I will take probably a third initial starter size and then scale my way up or down in that trade depending on market action. If it moves up and it looks like it stabilizes, I might dip my toe in. If it moves back, I let it bottom out for a little bit and see if I can't catch that bounce before it comes back to where my initial buy was. So lesson number 1 is don't go all in on a trade. And so to how Dan started his talk is you don't day trade swings, scale in where appropriate. As long as you're not round tripping the trade on the same day, it's not a day trade. So you can add into that same trade 10 times. It's not going to, if you're under PDT, it's not going to tag you out and put you in violation. You can constantly add. It's when you round trip it to sell it, then it'll tag you. So, this is why I say it's slow and steady. I write the word patient. There's a defined timeline to some of the things I do for the trades. And if they work, great. If they don't, they don't. Losses suck, but it's part of the game. I wish we could all be right 100% of the time.
So this is a really good question. What if you already got caught with your pants down and you're down 80% of the year? Because this is
wow.
Yeah.
All right.
You know what? I think that this is a good question because I think to a certain degree, everybody's been in a similar circumstance. I don't know. 80% is a lot, but we've all been over leveraged. Do you want to go or you want me to?
Why don't you start it and let me digest how I want to answer this one.
Yeah. So me personally, the way that I handle this is that you're not down 80%. Okay. Tomorrow or whatever. Honestly, if I were you, I would take a 2-week break. And I think the way that I would handle it is that, the biggest reason that I feel that people get beaten down and then they continue to lose is because they try and make it back in one trade. And then they try and go bigger. And then they try and go bigger. And then they lose on those. And then all of a sudden you're blown up. Take a 2-week break. Go ahead.
No, I mean, you're spot on. I mean, I don't think I could have said it any better. I think the other thing to do is, and listen, guys, we all have bad habits. As long as I've been doing this, I still have bad habits on things I do. We all want a revenge trade because we think we're right and we're wrong. We're like pissed. I'm going to make it up. So I'm going to size bigger. Listen, I do it occasionally. I can tell you I did it today because I got pissed off that my first trade of the day went completely south on me and I was freaking angry. So, I think the best advice I can give is get up, walk away from your desk, go take a walk outside if it's permissible, go make a cup of coffee, go just chill out for 15 minutes and come back. Get your emotions in check, because if you're revenge trading, then you have your emotions are out of control and you're not cut out to do this for the day. There should be no emotion in this game. We joke about Verde being the robot when it comes to posting filings and news, probably faster than Bloomberg, which is amazing. But you need to be a robot in this game. You need to just absorb the loss, move on, and just say it is what it is, and no, skin on my back. And listen, if there's an emotional attachment to that loss, then you need to go take a look in the mirror and say, am I trading with too much capital I can't afford to lose? Is there a reason that I'm doing this because economically I'm in a pickle? And if that's the situation, you need to wholesale just take a step back from trading altogether, because you're treating this more as gambling, and you're going to blow up. And I'm going to tell you, you're not going to be one of the 90%. You're going to blow up 100%. And so you just need to treat this extremely, that's why I use the word, you see me use the word mechanical on the trade. Things are mechanical. Things are like a robot. You should just be a machine with no emotion. If you can adopt that philosophy, that's 50% of what this is. And therefore you will not put yourself in a position where that 80% down becomes 100% down. And again, if you can't do that, then reevaluate why you're doing this, and come back to the game at a later point in life. Because you're never going to succeed doing that. And I don't mean to say it to discourage you. I'm saying it actually to protect you.
Yeah. I think that's a really good point. And if you do want to come back to this game, like, let's call it ever, or even right now, it's probably best that you just take a complete vacation from the market, come back with a clear head, and don't worry about the 10,000 that you had. Worry about the 2,000 that you have. And even from there, scale down. Prove to yourself that you can do this before you continue to lose money. I think that's...
And paper trade. That's the other part. Like, don't just dive in. Like, I never dove in the beginning. I paper traded for like the first few months I did this. Then I dove in because I'll be honest with you, you got to really take it on the chin to really learn. Paper trading is one thing, but you really got to take it on the chin. But I made the same mistakes as anyone else. I blew up 2 or 3 times at the beginning of my career. I really blew up bad. But I also learned real quick the mistakes that I made. And I corrected them. But I also, when I blew up with money that I could afford to lose. And so for me, it was, well, that sucked, but it's a lesson learned times 3. And I improved upon where I made my mistakes. And that's where I sit today. So, it's, again, it sucks, but don't be discouraged. Ask for help. We're here to help. But I will tell you, the first bit of advice I'll tell you is the paper trade. Take a step back, check your emotions, look at your finances, and determine, are you right for this today? And if you're not, guess what? You can come back. This is never going away. So it's always here. All right. Could you provide some information on methods for reading news quickly? Yeah. I have a filter on my news feed so I can filter out some of the keywords. But honestly, I've trained my eyes to read the feeds so quick. And does that mean I catch every news? No. Do I catch habitual tickers that are cult stocks? Yeah. I look for those a lot. And if I see a cult stock and there's a sexy algorithm tripping headline on it, you're damn right I'll slap it. I don't go in heavy. I'll slap it. And that's why we tell you guys, don't buy the first spike. Never buy that first spike on something. Let it come back. Let it find some support and then catch the next leg up. Because sometimes that headline might not be which it may not be as much as it's supposed to be. Example, BKYI today. Headline read great, but the market told me different. So, news is you just have to either get a feed that you can filter keywords, crypto, blockchain, COVID, positive cancer data, things like that. If you can find a newsfeed that does it, and there's a bunch of them out there, guys. You just got to find ones that work for you. I use some that are so freaking old that most newer traders have no idea they even exist, but they exist to me and it works. So I have multiple news feeds that go at once. So anyway, all right. Let me try to catch up. And guys, again, I apologize. I'm just trying to catch up here. All right. So one more time, the five lines that I use, the five, we'll call them support and resistance lines, the 9 and 13 EMA on the daily 1 minute and 5 minute chart, the 9 and 13 EMA on the daily chart. I also use and add VWAP in, VWAP, 9 EMA, 13 EMA. Other traders will use like 8, whatever. I mean, it's all relatively close. And then on the daily chart, I use the 50, the 20, and the 200 simple moving average. That's it. You don't need a whole bunch of spaghetti on your charts. That's just my opinion. Other traders do it their way. I keep it simple, stupid. And it works for me. Big Chungus, what are my favorite current swings? The ones that I'm in. Do I think that NFT craze is going to last or will it end to similar .com bubble? No idea, dude. And I'll be honest with you. If the NFT craze eventually pops, like all things probably will pop, we'll be on to theme number 500 at that point until the rest of the world figures it out. So let's just trade what's in front of us. And when that shifts, then we'll shift with it. It's as simple as that. How many different stocks, funds, ETFs do I own? Enough. I can be diversified. And it just depends, man. Some of it's, swings, some of it's day trades that turn into a couple of days, and some of it's in my IRA and sits there, and some of it's blue chip. So I own enough. You want to take the next one?
Yeah. Let me see. What are we going to do? For biotech trading, is it essential to be very knowledgeable on the science behind the drug? That's a good question. Bob, you cut in because you're the man. So in my opinion, I think the most important part when you're trading a bio is knowing if there's a demand or if there's a need. So for instance, if there's 20 different drugs with this same component, it doesn't matter what exactly it's curing. If it's the same component, there's not really going to be a huge need for the market.
Unless that drug changes the dosing regimen. So, for example, if the existing players on the market is like a daily pill and they all sit on top of each other. Basically, they're interchangeable to some degree, some variance between them. And the new player comes on the market, and that new player is once a month. That's enough to maybe alter the landscape. So that's something you could look at from the marketplace. And the other part then is, what is your, what does the overall market look like? Are there generic competitors on the marketplace? And you're bringing another new product to the market, and there's really a need for it, like you said. But if there could be a wholesale shift for the end user, then yeah, there could be some game to that for sure. Do you need to know the biological background or not biochemical background of the drug? Yeah, I mean, listen, guys. Again, I've been doing this trading thing for a long time. I will tell you, a lot of these penny biotechs are the same shitbags that have been around for 15 plus years. They have changed names. They flip-flop drugs between them. They keep trying to get shit to the market that's never going to come to the market. AIM, for example, with Ampligen, it's never coming to the market. I don't care what anyone says. It will never come to the market. It has never done anything, yet it still exists in the trading universe. And they're playing a game. They're padding their pockets. It is what it is. There are innovative drugs out there. I would look, for me personally, anything in the cancer space. We saw that with GLSI. Out of nowhere, they had curative data in breast cancer. Again, it's still early. And that was a company that was kind of written off. It's amazing data if it continues forward in future trials. It's amazing for the patients if that's the case. But it's a TBD. But for now, the market loves it. And its trading vehicle, we'll have to see. I think the harder ones to trade in are the ones that are subjective in data. And by subjective, I mean when you deal with psychiatric drugs, it's subjective in that the data that's collected by the researchers and the companies doctor asks the patient this, how do you feel? I feel great, or I feel like shit, or I feel normal. That's subjective because it's based on opinion. Concrete data is imaging, blood work. Oh shit, the cancer's gone because we don't see it anymore. There's no markers left in the person's blood. We don't see it on the MRI. We don't see it on the CT scan. So for me, those are better plays than some of the psychiatric drug plays. And it doesn't mean that the psych drug plays don't work and you won't have a great stock or a catalyst run up. It just means I would be cautious if dare you ever hold through data, which I strongly recommend you never do. Play it as a run up. That's the simplest thing with any of these biotechs. Just play them as run ups. They're trading vehicles to me. And that's it. Accumulation scanner. What do I use? What criteria do you guys always ask me about my accumulation scanner? It's my playbook, guys. I don't know if I want to turn it over. I look at relative volume. I look at volume compared to the prior day, and I look at that on percentage and time intervals. I will not share the exact parameters that I built into it, meaning that how I kind of scale it down. It's constantly fluid. I do adjust it. I will stress, even if I shared it with you guys, and I've said this before on prior talks, every beep that it makes doesn't mean that I buy. You have to parse through the data that comes through on it. And I look for anomalies, especially on the accumulation scanner. I have it tagged in a way that I can catch things getting loaded. And does it necessarily mean that it's being loaded? No, it doesn't. But I catch it, and it has to hit for me a couple times to see it. I caught it 3 different times today. I caught it in RCMT, I caught it in NTEC, and can't remember the last HCDI, which really never really took off, but it pinged in the same way. So I caught three front loads, and you saw what they did to those 3 stocks. And it was very plain as day on my accumulation scanner when they came through. And it is. It's much easier for me to read it in the afternoon when we hit the slower period than it is in the morning where it's just freaking insanity and it just pings in my ears ring. But yeah, so you can look them up online. I think TI actually might have an accumulation scanner you can kind of play with and adjust. Just figure out what's best for you on those scanners and just keep tweaking them and tweaking them and tweaking them. It's never a fixed number that I use on those scanners. It's a constant work in progress because the market changes, behavior changes. But if I can catch them when I see them and they do a certain pattern on the scanner, I can catch them real quick. And that is just from my trained eye, and that's just years of looking at it and doing it. It took me a while to catch into it, and then I had that aha moment. So
I think that's really important. What you mentioned is that guys, I think a lot of new traders think that, the scanner tells you when to buy, when to sell. And that's so far from the truth. It just brings something to your attention.
That's it. 100%. Yeah. It's strictly ping. Let me look at it. And it pings a lot. So I've got to keep my eyes on that, keep my eyes on my positions, there's a lot going on in front of me. But you're right. It's an alert system. It doesn't mean that you jump in right away with both feet. So it's okay. You have my interest. Let me pull the chart up. Now let me watch the volume on L2 and the chart, and let me see if someone's gaming the system a little bit. So, and that's what I like to do is catch them in the act. Ride their wave and get out before they dump on me. So it's fun. It's like fishing. All right. Someone said this. What made me take CGIX today as a lotto play? So I took it as a lotto play because one, I got burned on BKYI early. So I was like, hey, instead of being revenge trade and having emotion, I was like, let me take a reduced position in this and say, let me see if this works out. And the reason I took it was because it had merger news. And I think the merger news actually had been talked about before. But if you guys recall, a couple of days ago, even last week, we had a shit ton of stocks that ran on mergers. And on top of it, we didn't really have much news this morning. And so I was like, well, you know what? I bet this freaking thing gets picked up at some point. And lo and behold, it did. So I anticipated the behavior of what the market, i.e. every other trader, would do on a slow news morning when we had a red market. They're going to migrate to something in the pre-market that had news or a catalyst event that really hadn't done much. That's usually an easy way to pick them out. Doesn't always mean that every one of those goes off, but your probability of having a successful trade will go up. Now, and you can do it one of two ways. You can either ride it out and be early like I was, and that's why I call it a lotto, or you do what Gary does and we do during the middle of the day, which is a momentum trade. Let it hit that first spike, let it pull back, let it ride out one of those 9, 13 EMA lines or VWAP, and then let it kind of base out on the 1 5-minute intervals, and then try to catch it up on the upswing. It's not a complicated science when you do that. It's just more strategic. Sometimes I like to be a little bit early because I want to predict the move. And that's just from my personal experience that I can kind of filter out human behavior because a lot of trading is not just emotions for you as a trader. It's also predicting human behavior of the person on the other side and what the market will do. Get those two kind of concepts down. You're in a really good spot.
Bob, you have a nice voice.
Oh, thank you so much. I
Although
appreciate
not a question, I figured
it was a statement.
Yeah, it was a statement.
All right, El Shisha. I think I've seen this. I don't know if you've said this a few times or I'm just rolling back because I'm like so far behind. In a bear market. Yeah, dude, in a bear market, be defensive. We're not in a bear market by any stretch of the imagination. But if you feel like it's a bear market and things are going against you, then either don't trade it or size significantly down so you reduce your exposure. It's the easiest way to navigate this if you're not comfortable with the marketplace. That's it. Don't have to. Like I said it before. I'll say it again. Market's always going to be here. If you're too aggressive in a type of market that you're not comfortable trading, you're probably going to blow up, and you won't be here. So take a step back. Take a step back. I've traded all sorts of markets, so I can adjust pretty quick on the fly. But I think the vast majority of folks here have not. And you guys were, again, got lucky by trading an incredible market the last few months that only went up, 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 up. But now we're in this weird kind of flux pattern. And this is the standard ebbs and flows of a market. So this is where it's going to weed out the girls from the ladies, the boys from the men. And regrettably, a lot of folks are going to get clipped. But don't let that discourage you here. We will do our best from, to help you guys, at least in my opinion, try to navigate it.
Yeah, I think I saw a tweet that it said, like, maybe 2 months ago, it said 90% of people are making money in an industry where on average 90% of people lose. Like, let that sink in. And I think that that's really important.
It's super important. And I think, there was some truth to JP Morgan's statement. I kind of busted on Zero Hedge on Twitter today about it. They're like, well, we're not seeing an influx of retail on the $1,400 stimulus check, on the Wall Street bets stocks. Yeah, no shit, dummy, because they're already inflated up. But what you're seeing is a rotation in NFTs and crypto. You're also seeing people who aren't trapped in their homes, and they're going out and raging right now, and they're buying shit, and they're going to bars, and they're buying. I saw a picture today of some dude who bought $1,400 of $20 lotto scratch off tickets. That's where they're spending their stimulus money right now. They're not trapped at home to trade. They're using it to gamble on sports. These were things, if you don't forget, last year when the first round of stimulus checks were cut, all this was not available to people. The only thing that was available to people were Netflix, trying to find toilet paper and paper towels, and learning to trade. God help you on Robinhood. Please get rid of that broker. Beg you. All right. How did you discover that when Perceptive, Tang, Point72, Baker Brothers, and Orbined, Steve Cohen buys that there is a high chance the stock will fly, especially Perceptive, because those are the gurus of biotech? Now, understand this. Just because they take a position in a stock does not mean that they are long the stock. Sometimes they take a position in that stock and they loan their shares out to short. What is the definition of a hedge fund? It is not to go long on everything that you do. And so just because Steve Cohen goes in and buys ONTX at 20 cents does not mean Steve Cohen is long ONTX. And yet it ran up. And yet it got, this is way back, I think, when Hugh and I last year, ONTX ran from like, what was it? Like 13 to like, I don't know, like 80 cents or something like that.
That's
something.
Stupid.
And then the rug pull happened. Well, why was there a rug pull? Guess who loaned their shares out to short? Probably 0.72. And some of the other hedges. And so they work trades both ways, guys. Perceptive, I will say, though, is one of the best when it does come to predicting. Their track record is pretty fucking phenomenal. Baker Brothers is really good. I mean, and Steve Cohen is actually really good too. So again, I say that in, not in jest, but understand that a hedge fund is not always long. They'll buy stock to loan out their shares. They've got to make money for their clients, and not everything goes up. Let's see. As a swing trader, how do you make money when small caps are underperforming? Well, I think first and foremost, I don't know what you mean by underperforming. Small caps traditionally underperform everything. That's why they're a small cap. They're not Apple, they're not Tesla, they're not IBM. There's a reason that they're $5 and under. If you're losing money on a swing trade, then my question is one, why are you swinging the trade? Where did you buy into the trade? Did you chase your entry up versus letting it come back down from that initial spike? I think Zach says it best too, is like, hey, just because he's long a trade doesn't mean you have to buy it that day. You can wait a week and let it come back down. There's a catalyst on why he swings stuff, why I swing stuff. The catalyst isn't that afternoon or tomorrow. It can be a time period out. So don't feel the urge to just go in and pound that trade after we say it. Have some self-constraint and self-control. Like, I get we all get excited, but remember what I said about emotion and controlling emotion. Like, just let it chill out a little bit, and then observe the action on it. Trust me, the trade will be there, and it'll do well for everyone. It just oh shit, it's up 50%. I got to jump in and buy it. No, time out. Time. Take a step back. There'll be another trade, or let that one come in a little bit and let it work its way out to what the catalyst should be. The trade will be there.
I think that we're seeing more of a range than we've seen inside, really the past year. And so I think that a lot of people, if you buy at the top of the range and it comes down to the bottom of the range, well, yeah, then you got to kind of identify the ranges and don't buy on don't buy on resistance. I don't know, like if you're a swing trader, then you're not a breakout trader. You're not buying the breakout.
Right. And I think that's exactly well said, because if you're swing trading, your volume on your swing trade is not going to force that resistance to bust.
Yeah.
You're going to get your ass slammed right back down to earth and go, oh shit, now I'm down 15%. Yeah, you kind of should have waited, let it get back down to support and then get back into it. We all want to make money doing this. This is why we do it. We don't do it for enjoyment, even though it's enjoyable. You do this for one reason and one reason only. It's to make money. Just call it pointedly what it is. And, but you have to have some reservation and some self-control on your actions and be, as I used the word before, strategic. You need to be strategic. What makes you get out of a swing? Any stop loss criteria? Yeah, I think you always have to have a mental stop loss. I don't set stop losses, guys, because you're gonna get tagged by the algorithms every single time. So don't. I mean, do your own thing. I don't set them, but I'm not giving you advice on how to do that. Y'all, are adults and do your own thing. If I get out of a swing, it's because there's a delay in, if it's biotech, there's a delay in data. If I'm in a swing and let's say they update their corporate presentation and now it doesn't align to the 10Q, yeah, I'm out of there because that's a red flag. If the price action is sloppy and the market's sloppy, it is what it is. I'm okay with that. If everything is good and this is just like on this precipitous drop and I'm like, dude, what the fuck's going on? This makes no sense. It's a red flag to me. Something's funky. They're not telling me, in the filings and the corporate presentations when I reach out to investor relations, something's going on. Like there's hidden warrant dilution. So you just have to go with your gut instinct on some of it. Have I sold some shit and then the next day or 2 days later it's taken off? For sure, dude. And it's like, fuck, man, I just got dick whipped for like 20%. And now that fucker's up like 50. So, that happens. It's never a perfect science. But the best thing with the swing trader, we've said this on prior talks, and I know Hughes talked about this on PGIR talks. If there's a defined catalyst, run with the catalyst. Don't hold through a catalyst. Don't hold through data, especially on biotechs. Play the run up. Play the run up on anything. Your job is not to guess a top or a bottom of a trade. Your job is to ride a wave and to ride that wave successfully and then depart the wave and then look for another one to ride. That it will define your longevity and will define your success. Are algos really that big of a deal? Why can't normal people get algo software? Yeah, because you're not a hedge fund. And you're not a market maker. And more importantly, you don't have that type of capital when an algo goes.
wait. Yeah, that is, I mean, yeah, I mean, that's a lot. That's a loaded question in and of itself. But yes, algos are the deal. Algos are the deal.
Yeah, when they take over and insanity ensues because the algorithms are tripping over each other, that's a beautiful thing. When it's in the right direction, when it's in the other direction, it's a problem.
Yeah, that's the only thing that really matters. I saw a statistic that 60% of the market in like 2012 was like algorithms. Now it's like 80%. So even though we have tons of traders coming in, and they do influence the market, the algorithm, if they wanted to, take it over within
milliseconds.
Yeah.
Milliseconds. Yeah. And so always be aware. Like there was a lot of knifing today on some trades. Dude, that was straight up algorithm knifing. And listen, algorithms isn't always about volume and like insanity moves. Algorithms can be just these micro moves to prevent the move from breaking resistance lines, and they can knife them, and they're programmed to do it. It just depends the market maker that's in control and what they want to do. So let's see.
Yeah, there's a few while you're looking for a question. I'll link. There's an ex market maker, and you can't just like call up a market maker, but there was a guy who he started inside the business, became a market maker, and he talks on a podcast about basically all, like, lack of a better word, all the shitty things that they would do to fuck with retail traders.
Yeah.
And he talked about it, and he felt so bad because they would literally just, like, their entire job was enticing retail traders into thinking one way and then do the exact opposite. And he ended up quitting the job because he was just like, dude, like, I knew that I was just, like, my entire job was to fuck people over for my benefit.
And remember, their job is to what? Make money. So how do they make money? If they're short of stock, they gotta whip you down at the knees and crush you. And so, yeah, it's a game of chess. And that's why I always say, if you ride a wave and you don't try to guess the bottom or the top of a trade, and you ride that middle portion, that's the sweet spot, man. Don't worry about, oh shit, I left like XYZ on the table, or who cares? Who cares? You book the gain, move on to the next one, and compound. Don't, always make sure when you have gains at the end of the week, you're drawing first and foremost out for your taxes. Always take out that portion and put it into a savings account, and do not fucking spend it. Because no matter what happens to you and you blow up or whatever, at the end of the year, you owe that money to the IRS and they don't give a shit. So make sure you're taking a percentage out. As Hugh has told you, pay your quarterly taxes, send it in, don't be late, and then take a small chunk of the other money that you are for gains. Enjoy it at the end of the week. Go buy yourself something dumb. Leave the rest of it in the account and learn to compound. It'll get you out of PDT if you're under the PDT rule quicker. And then you can start, as you gain confidence, as you gain consistency, it allows you the flexibility, not to take bigger trades, but you can take more trades. And it's like compound interest. It adds up. No different. You learned that last year. We talked about it. Compounding is the greatest thing, but God help you, please. I beg you, take out taxes. Always reserve your taxes. I do it, guys. I absolutely do it. I keep it on a spreadsheet and I pull it out and I monitor it and I send it over to my accountant. So you don't want that horrible situation So
Yeah.
it is April 15th, but they'll still call it May. You don't want to be in a situation going, oh shit, I owe XYZ and I don't have a penny to my name. Guess what? They don't care. They don't care.
Yeah.
So
compounding's great until you owe. Yeah.
Yeah. Owing's part of it. It sucks. But you know what? If you didn't owe it, then you didn't make it. So there's the other way of looking at it. Yeah. Do I trade under an LLC? Who do I use? That's a personal decision. I'm not going to answer that. I just recommend, because I can't answer it. I'm not a financial advisor. Go talk to an accountant. That's a personal decision for you and your accountant to make if you have one. And if you don't have one, I would, recommend probably go get one. All right, guys. One last question, and I'm gonna tap out for the night. And then Hugh, do you want to find a fun one?
Let's find a fun one. Yeah,
trading 15 years. I'm sorry to interrupt. Yeah, I've been trading 15-ish plus minus years, something like that.
Yeah. So let's see. So real quick, in market makers high volume, yes, they're entitled.
Oh yes.
Yeah. Go ahead.
No, I said, oh yeah. It's called dark pool, guys. They'll hide it. You won't see it. Yeah.
And then I think the fun question is, what does Toto mean to you?
This Toto mean? All right, so Toto was this total freaking joke in the room last year. Ricky Bobby despises Toto with every ounce of his soul. And so, this was April, May. We were on the market was heating up, and the room was on this sick run. We were having, dude, we were all making good money. It was fun. We were laughing.
85% of the room was green for months.
Yeah. And so we would joke around. And so it didn't start that way until I fucked around and someone made a comment about Toto. And that's when Ricky said he hates him. And I played it. And we went on this fucking tear in the room for like Hugh said, we went on a tear for 6 to 8 weeks straight of insanity. And so it just became, and so my accumulation scanner was picking all the shit up and we were playing it, whatever. And we were just crushing it. And anytime I didn't play Toto at the end of the day, it was we had a good day, but it wasn't great. Then we would play Toto and then we'd have these fucking phenomenal days. And so it just became this running joke. And we still play it because it irritates the shit out of Ricky Bobby. And that's really the main reason. Anyway. All right, guys. I appreciate you letting me jump into your evening. Thank you so much. I hope this was fun and beneficial for y'all. Hugh, thanks for joining. Dan, thanks for letting us be the background noise to your Fortnite or whatever game you're playing on your Twitch account. And we will catch you guys manana. Get some rest. We'll try to have a solid day. Just trade what's in front of us, as I always say. We'll make the most of it and go from there. So
yeah. And just a quick note. Thank you, Bob, so much. If you guys want to review this and you guys want to listen to this, it will be on our YouTube channel, hopefully by tomorrow morning. We talked about Bob talked about a lot of different content tonight. So it wouldn't hurt to go over it. And just again, thank you, Bob.
You're welcome. And guys, listen, if there are, I thought, and I'll leave it with this too. If there's certain topics you guys want to hear from me, or Hugh, or on their PGIR, let us know, and we can talk about those, or I can talk about it. And if there's a certain thing you guys we can stay on point versus kind of jumping around the board. We can do that in the future too. So anyway, thanks again, guys, for your time. I really, really appreciate it.
Y'all can hear me?
Yeah.
Okay. Yeah. Right now, it should be up on Twitch. And whenever I go off, it should still be on Twitch. I'll give out the link to that. I ran out of memory because I had it saving to the wrong hard drive, but I can just re-record it from the Twitch stream. But no, it should all be good. The first 15 minutes was full of people bitching to me about keyboard noises. But after unplugging every fucking USB port into my computer, we have solved those. And the last 45, all you men, and hopefully I can get it up soon.
Awesome.
Thanks again, bro. Everyone
guys.
in the Twitch stream, you had 2,000 people in here, and they're all super appreciative. So
Awesome.
yeah,
Thank you
shout out
so
to
much.
them.
Thanks,
All right,
guys.
guys. Have a good
Catch you
night.
tomorrow. Bye.
Bye, guys.